Hey you guys, welcome back to my channel where we talk about how to manage your own personal finances and how to save money. If you enjoyed today's video, please be sure to subscribe below. Please leave me a like. It helps out my channel so much. I can't tell you how much I appreciate it. And be sure to leave some love in the comment section. Today we're going to be talking about the Coinbase direct listing that is coming up on April 14th, which is just in a few short days from now. And we're going to be discussing whether or not you should buy shares of Coinbase when it goes public. And we'll be talking about the pros and cons of investing in Coinbase. So let's jump into it. If you don't know much about Coinbase, Coinbase is a regulated cryptocurrency exchange, and it was founded by Brian Armstrong and Fred Eschrom. Brian Armstrong is a former engineer for Airbnb, and Fred Eschrom is a former analyst for Goldman Sachs, so they're definitely some heavy hitters. Let's talk really quickly about the pros for investing in Coinbase. First of all, based on shares recently sold in private markets, Coinbase has a market cap of $100 billion, which will instantly rocket Coinbase when it direct lists to being a large cap stock, which is pretty insane. Just for reference, that's only $12 billion behind the market cap for Goldman Sachs. Q1 2021 revenue is up by 847%, which is just mind-blowing. It's $1.8 billion for Q1, and it was $190.6 million for Q1 of 2020. That's just a wild year-over-year revenue increase. Assets in Coinbase are at $223 billion for Q1, which is up from $90 billion at just the end of 2020. So in the last 3 months, it's gone from $90 billion to $223 billion. Net income from Q1 of 2021 is between $730 million to $800 million versus that same period of time in 2020 where it was $31.9 million. Another major plus for Coinbase is the fact that institutional interest in investing in Coinbase has grown by 55%, and of the $223 billion in assets held by Coinbase, $122 billion of that is actually from institutional investors. Another major benefit to Coinbase is that it is one of the leaders in the cryptocurrency exchange space, and its security is known to be one of the better security systems that are around, just for the fact that it hasn't had the same level of issues that other exchanges have had as far as hacking into their systems and stealing of cryptocurrency from its users, which is obviously a plus. Another thing to note about Coinbase is the fact that they say that they understand that their value is intrinsically tied to the value of cryptocurrency, which may change from time to time and is incredibly volatile. So they are actually looking to diversify their service offerings so that their value is less tied strictly to the value of cryptocurrency, which would be really great if they did that over time. However, currently they don't do that, so their value is very much tied to the value of cryptocurrency. So with that being said, let's jump into the cons with respect to investing in Coinbase. First off, we'll start with the same con we kind of just touched upon, which is the fact that Coinbase's value is intrinsically tied to the value of cryptocurrency, which traditionally is incredibly volatile and swings back and forth very much. And the reason that their value is tied to that is because Coinbase's revenue currently strictly comes from transaction fees that they charge for purchases and sales of cryptocurrency on their exchange, as well as from margin fees that they collect as well. So currently, the value of cryptocurrency and the demand for cryptocurrency and the purchase and sale of cryptocurrency is very much what drives the value of Coinbase. Moreover, 70% of the assets that they hold are in Bitcoin. And so, in fact, Coinbase's value is tied by 70% to the value and the demand for Bitcoin, which is like a pretty huge thing and just shows that they're not all that diversified, which can be a scary thing, so just bear that in mind. This, of course, means that the value of Coinbase will likely be highly volatile in the same way that the value of cryptocurrency is highly volatile. So just consider this stock a high volatility stock. Speaking of volatility, cryptocurrency markets have observed 4 major price cycles since 2010. And in a recent call discussing the Q1 results, Alessia Haas, their CFO, has explained that we believe we entered the 4th price cycle in late 2020. We do not know where we are, though, in the current price cycle, but we can already see that we expect to reach a peak materially higher than the last all-time high. So a huge word to note there is the word peak, which indicates the fact that they're going to expect that after they hit that peak, the prices to come down somewhat, which will mean that the revenue that Coinbase receives for the commissions that they charge on transaction fees will also have to come down in turn. And so this is all very cyclical, and what folks say about cryptocurrency traditionally is that there are 4 major price cycles, and usually over the first 3 cycles, the price for cryptocurrencies slowly rise, and then at the end of the 4th cycle, it's at its peak, and then it goes back down again, maybe not as far down as it's been, right? But it goes down again. And then in the next period, the first cycle of the next period, the price will start lower and it will slowly start to rise over the next 4 cycles that occur until it peaks out again at the next 4th period of the next 4 cycles, right? So with that being said, it could mean that in the next 4 cycles, at the end of that one, the peak is even higher than what it is at the end of this one, and that the value of cryptocurrency just trends upward but is incredibly volatile along the way. And so too, the value of Coinbase will be tied with that, and it will be incredibly volatile. And so folks are estimating that every 4 cycles it will come down, and then it will slowly rise back up to newer and greater heights than it ever rose to before. So if you are going to hold Coinbase and you're going to buy in now, and you believe in that 4 cycle concept, then what's going to happen is your value is going to go down at some point, and you will just have to stay in for the bumpy ride in hopes that in the next 4 period cycle, it will reach higher peaks than what it reached when you invested to begin with. Also on the point of volatility, their CEO, Armstrong, explains, "We may earn money when revenues are high and we may lose money when revenues are low, but our goal is to roughly operate at break even, smoothed out over time." So their goal is to operate at break even, smoothed out over time, which means that currently Coinbase's own CEO and their own directors don't believe in the fact that they're going to be profitable when you average out all of their revenue over time. So while they might have incredibly high revenue now, they're calculating into the fact that they think cryptocurrency may take a huge dive, and therefore their revenue may take a huge dive. And when you calculate that in and you average that in over time, they're actually expecting to operate at break even as a goal. So that's another con. When you look to management and you look at the directors and they're saying things like that, that's an indication to you that you should consider this a highly, highly volatile stock, a very high risk stock to invest in, because you definitely want to invest in something where management itself believes in the profitability of the product or the service or the company over time, which I'm sure Armstrong does, and he just wants to temper expectations. And usually when you do S1 filings or things of that nature, you are going to give the worst possible outcome so that you have all of the disclaimers out there while you're going public. So it's good that he shared this information with folks, but when you're making your investment decisions, you should consider these concepts when you're determining your risk tolerance and how high risk this is, because this is definitely going to be one of the highest risk stocks out there on the market. Another thing to note about Coinbase is the fact that it's regulated. And so some folks see this as a con and some folks see this as a pro. The folks who see this as a con don't like the fact that Coinbase is regulated, because the whole point of cryptocurrency when it was first made is for it to be decentralized, to have less government intervention, less control by institutional banks. And so a lot of folks don't believe in having cryptocurrency exchanges that are regulated in the same way that banks are regulated, because that goes against the whole concept of the purpose for cryptocurrency to begin with in their eyes. However, pros about being regulated is that it legitimizes cryptocurrency, which will increase demand for cryptocurrency, especially by institutional investors. And as we've seen in just Q1 of 2021, demand from institutional investors currently makes up almost half of all of the assets held by Coinbase, which is wild. So it could be that regulation in the cryptocurrency space is actually a good thing and helps legitimize it and helps make it more popular and increases demand for cryptocurrency. But we also don't have a lot of regulation in place for cryptocurrency, and I'm sure more of that will be rolling out, and we'll see how that affects the value of cryptocurrency over time, and there's still a lot to be seen there, so it's difficult to predict whether or not regulation is actually a good thing or a bad thing for cryptocurrency. But do your own diligence on that and consider whether or not you think it's a benefit or a setback of investing into Coinbase. So let's also just talk about the price target. Coinbase plans to reveal their reference price per share one day before the direct listing on April 14th. So they'll reveal that on April 13th. There is at least one analyst who predicts that the price per share could be 440 US dollars before the shares even start to trade publicly. That same analyst has increased his estimate, which used to be $195 per share. So he's obviously very bullish on Coinbase. Ultimately, the market demand on April 14th will predict the price per share. When it comes to whether or not I would recommend that you invest in Coinbase, I will say that you should treat any investment in Coinbase in the same way you treat investments into cryptocurrency. And my position on that is that you shouldn't invest any more than you're willing to lose. You should consider cryptocurrency, Coinbase, more of like a high probability lottery ticket. You know, it has a higher probability of winning than what a lottery ticket does, but it also has a very high probability of losing. And so it is very volatile. It is incredibly risky. And so only invest what you are willing to lose. I think that it's a safe bet to have a small percentage of your savings or investments in cryptocurrency or in Coinbase, maybe 1% to 5% of your total savings. Because one thing we're definitely hearing from its own management is that it's going to be a bumpy ride. It's going to be incredibly volatile. I think that Coinbase is maybe slightly more safe than cryptocurrency itself because Coinbase has the ability to diversify its service offerings. It can offer other bank-like services that it's not currently offering, so its value can slowly be changed from being intrinsically tied to cryptocurrency to only partially being intrinsically tied to cryptocurrency. So me personally, I'd probably feel slightly more comfortable investing in Coinbase than I do cryptocurrency, but I still think you should only invest what you would be willing to lose in a worst case scenario. So with that all being said, I hope you enjoyed this video. If you did, please do subscribe and please like. It helps out my channel so much. I cannot tell you how much I appreciate it. Leave some love in the comments section. Thank you guys all so much for watching. Catch you in the next one.